Okay. All right. That will also mean some mark-to-market gains for PSU banks. I believe now we have Sanjiv Bajaj with us. Sanjiv, I don't know if you care to sit through the press conference. There is a 25 basis cut, but further cuts are at the moment a little up in the air. Does this get passed on? Will your companies like Bajaj Finance be lowering lending rates for their borrowers?
So Lata, I did see a part of it, and yes, we will be lowering it based on our average cost of borrowing as well. So we have been passing on benefits to our customers, those that have the floating rate products and those that are taking new loans from us as well. But what's very important to note is we have to now, and it's there in the statement as well, is banks have to pass on the benefit of this. Banks have been sitting giving reasons of fixed deposit rates being high, etc., savings rates being high. But they have to pass on, they have to transmit this. And as that happens, today a third of our borrowings in Bajaj Finance is from banks. And as that happens, we will definitely pass this on. We have to see that the end customer benefits from these rate cuts, and that's what's going to spur growth.
Okay. A competitor of yours and a banker is with us. Mr. Manian has been speaking to us from Kotak Mahindra Bank. Mr. Manian, what is your sense? Now, is there an accelerated passing of, deposit rates and lending rates by banks once this FCNRB deposit moves out?
No, so I think we have to wait and watch the November, December months for the FCNR thing, how it pans out. And of course, the RBI has made it clear that sufficient liquidity will be available in the system. So I think bankers will be watchful till this is out of the way. And once that is out of the way, I think more concerted measures can be in place to get rates.
You don't see any danger to bank margins? No dangers to bank margins from competitors like Sanjiv Bajaj?
No, so Sanjiv Bajaj is a competitor as well as he said, 30% of his borrowings are from banks. So he is not only a competition. So we work with them as competition as well as partners and customers. So yeah, there is, of course, there is
bank margins
at the higher end
pressure?
No, so at the higher end customers, obviously the margins will be under pressure with the rates going down. And as I already told you a while back, bank credit does compete with bond markets. Finally, some proportion of the borrowing is going to the markets, and therefore banks, to be competitive, have to price their loans and that is going to put pressure on margins. But I guess some benefit will come out of the cost reductions as well. I'm assuming some part of it will be mitigated by lower deposit costs and also banks borrowing in the money markets.
Okay. Sanjiv, you are quite a heavyweight in the NBFC space. Will you all be cutting rates further to your borrowers? And more importantly, do you think rates now have become attractive enough for both consumption and to some extent even some SME industrial activity to pick up?
So clearly, Lata, rates have become attractive enough. For example, if we see the last 5 years, consumer durable sales, televisions, washing machines, refrigerators, there was really no growth. And we know that because we account for 25% of all sales through our financing. This year, for the first time, we are seeing growth. We are seeing very close to low double-digit growth. And that's a positive, which means people are buying. In addition to that, we have the pay commission money that's going to come in or starting to come in, that from the armed forces, better monsoons, rural growth should start. So we have everything right now for significantly better economic growth over the next few quarters and going ahead. And I'm not going to talk about external negative headwinds that are possible. That's maybe another question. In this situation, I believe that the stage is already set for greater growth, and with this 25 bips cut, we should transmit it. I would like to transmit as much of it as I can to the customer, but it is for Mr. Manian and other bankers, and Mr. Manian is also an old friend, to not hedge themselves with multiple issues, pass it on, help us pass it on, and let's see actual growth on the ground.
Well, your pulse is on the ground, as it were, Sanjiv. Are you getting a sense that there is a big consumption growth coming?
Yes, we are clearly seeing that, not just because of all the big sales that we are seeing every day in the front page of due to the big marketplaces, but we are seeing an improvement across whether it is consumer-driven sales, whether it is our SME sales. It's still early signs and green shoots in the old parlance, but we are seeing that.
Okay, we hear a lot about rural consumption because of a good monsoon after two bad ones. Is that there?
We've not yet seen it. Rural actually in the last year has been slow, especially when it comes to micro and small businesses. But I would expect that after this monsoon, which means maybe in the next 2, 3, 4 months, as we see the first crop getting sold, for this situation to reverse. But we are seeing that clearly on the urban side. And hopefully, as I said, we should see it in the rural side also soon.
All right. Out of time, Sanjiv Bajaj, but you have given a flourish to the completion or to the end of our monetary policy analysis. Mr. Manian, thank you very much as well. You're also optimistic about another rate cut. Thank you both for participating. Well, the key takeaway from the Reserve Bank monetary policy is this, that there is a cut. That's the first positive for the economy itself. But the Monetary Policy Committee sounds very cautious about the trajectory of inflation going forward. They don't look like they are in a mood to give a series of cuts. Even one more looks a little, questionable. But there is a possibility that the Reserve Bank's framework itself has changed, and therefore one more cut may come. With that, it's back to you in the studios. We end the coverage of the monetary policy.
Okay, Lata, thanks very much for that. So on that note, we're in fact going to wrap up this coverage, and that's all that we have on this show. After the bell, just after a short break.